In this video, I'm revealing a simple and profitable trading strategy that is proven to have a high win rate. And at the end of the video, I'm going to show you proof of it having a high win rate by backtesting the strategy 100 times. So without further ado, let's get on with the video. For this strategy, we are using a combination of 3 indicators: the stochastic, RSI, and MACD. First, let's start with the stochastic because that will generate our main entry signal. The stochastic is a very simple to use indicator that does a very good job of identifying overbought and oversold levels on the market. It consists of 2 parts: the blue line, which is called the K percentage, and the orange line, which is called the D percentage. One of the most common mistakes that traders make when using this indicator is that they're trading the stochastic by itself. So they take a buy position every time the indicator hits oversold, and they take a sell position every time the indicator hits overbought. If you're still using the indicator this way, you will get a very low win rate. Instead, you need to combine the stochastic with other indicators to further confirm your analysis. And so let's move on to the second indicator for our strategy, which is the RSI. The RSI is one of the most famous indicators used in trading, and a popular way of using the RSI is by trading it as an overbought and oversold indicator. However, for this combination strategy, we already have the stochastic to do that job, so having 2 indicators that give the same signals is quite useless. Instead, we are using the RSI as a trend confirmation indicator, and to do that, first, we need to go to the indicator settings and change both of these levels to 50. So now we have a single line in the middle like this, and the way we use it to confirm a trend is very simple. If the RSI is above the middle line, it means that the price is on an uptrend, so you only take buy positions. And if the RSI is below the middle line, it means that the price is on a downtrend, so you only take sell positions. Now let's move on to the third indicator, which is the MACD. The MACD is one of the most popular indicators that does a very good job of detecting momentum. And a common way of using the MACD is by taking a buy position if the MACD line crosses above the signal line, and taking a sell position if the MACD line crosses below the signal line. However, this strategy only works if the market is trending. If the market is moving sideways, the MACD often gives false signals. So that is why for this combination strategy, we are not going to buy or sell just because the MACD crosses over. Instead, we are using it to give extra confirmation and making sure that the momentum is on our side. And so this is how the stochastic, RSI, and MACD strategy works. First, let's start with our entry signal. To identify a buy signal, the first step is you want to look at the stochastic and wait for both the K and D lines to hit oversold. Then, you want to use the RSI to confirm the uptrend by making sure that it's above the middle line. The next step is you want to use the MACD to confirm the upwards momentum by waiting for the MACD line to cross above the signal line. Once this happens, however, you still need to make sure that both of the stochastic lines still hasn't hit overbought yet. And if all the rules are met, you take a buy position. Let's move on to finding sell signals. Again, the first step is you want to look at the stochastic and wait for both the K and D lines to hit overbought. Then, you want to use the RSI to confirm the downtrend by making sure that it's below the middle line. The next step is you want to use the MACD to confirm the downwards momentum by waiting for the MACD line to cross below the signal line. And you still need to make sure that both of the K and D lines still hasn't hit oversold. Once all the rules are met, you take a sell position. Now for your exit strategy. If you took buy positions, you want to place your stop loss below the nearest swing low and set your profit target at 1.5 times your stop loss. Similarly, if you took sell positions, you want to place your stop loss above the nearest swing high and set your profit target at 1.5 times your stop loss. So now, before we backtest the strategy 100 times, let's look at it in full action. In this chart, we can see that both of the K and D lines is at oversold, meaning we're going to take a buy position. Then, you want to confirm the uptrend by making sure that the RSI is above the middle line. The next step is you want to use the MACD to further confirm the upwards momentum by waiting for the MACD line to cross above the signal line. And you still need to make sure that both of the stochastic lines still hasn't hit overbought yet. Once all the rules are met, you take a buy position. Now for your stop loss, you place it below the nearest swing low and set your profit target at 1.5 times your stop loss. Let's look at another example. In this chart, we can see that both of the K and D lines is at overbought, meaning we're going to take a sell position. Then, you want to confirm the downtrend by making sure that the RSI is below the middle line. The next step is you want to use the MACD to further confirm the downwards momentum by waiting for the MACD line to cross below the signal line and make sure that both of the K and D lines still hasn't hit oversold. Once this happens, you take a sell position. And for your stop loss, you place it above the nearest swing high and set your profit target at 1.5 times your stop loss. So now, I'm going to prove that this strategy actually works by backtesting it 100 times. For this backtest, I'm going to use the EUR/USD 30-minute time frame with a starting capital of $1,000. And for our money management, we are risking 2% over total capital per trade, and for each trade, we are using 200 times leverage. By the way, you can download this backtesting tool for free in the description below. So without further ado, let's start backtesting. And finally, after backtesting the strategy 100 times, the results are in. It took us 134 days to reach 100 trades, and out of that 100 trades, we received a very good win rate of 56%. Our most wins in a row was 5, and our most losses in a row was 3. And in total, we made a profit of $280.41. Which equates to around 28% overall gain of our $1,000 capital. So after backtesting, I discovered a couple of optimization and changes that you can implement to further increase the win rate for this strategy. The first one is limiting your stop loss. So normally, if you're taking a sell position, you want to set your stop loss at the nearest swing high. However, in this particular trade, you can see that the swing high is too far away from the price. Therefore, your risk will be too large, and it can potentially give you a massive loss. And that is why I recommend limiting your stop loss to only 0.15%. So no matter how far your stop loss is, your loss will never exceed 0.15%. Another tip that you can use is don't open a new position if you haven't closed your previous one. Let me explain. If you're taking a position, you only exit a trade if the price either hits your stop loss or profit target. However, there are times where the trade takes a long time to hit a target, and as a result, you will miss a couple of entry signals along the way, which is perfectly fine. I recommend sticking to only one trade at a time, because managing more than one trades is very hard. So, I just revealed to you a very simple high win rate strategy that you can immediately use right now. And all I ask for in return is for you to invest 2 seconds of your time into liking the video and subscribe to the channel. It literally takes only 2 clicks, but it means so much to me. And you can also check out my other videos as well. So thank you guys for watching, and I'll see you in the next video.